All right, let's jump right in. Something really weird is happening in the market right now. I mean, really weird. Think about it. Stocks, which are all about betting on a great future, are at an all-time high. But at the same time, gold, our ultimate safety net for when things go wrong, is also at an all-time high. Now, that just shouldn't be happening. So in this explainer, we're going to figure out what on earth this market split personality is all about and, what it actually means for your money.
Okay, so look at this. On one side, you've got the S&P 500 hitting a record high. That's the market screaming, risk on, let's go, total confidence. But then, on the very same day, you have gold, the classic risk-off move when you're scared, also hitting a record. It's like the market is flooring the accelerator and slamming on the brakes at the exact same time. It's telling us two completely different, totally opposite stories.
So, how is this even possible, right? Why are investors basically celebrating the future with champagne while simultaneously digging a fallout shelter in the backyard? Well, the answer is that there are two giant opposing forces playing a massive game of tug-of-war right now, and the market is caught right in the middle. Okay, so let's start with the first half of this equation, the engine of optimism. We need to understand what's driving the market to these crazy new heights.
So what's actually fueling this rally? Well, it really comes down to a few big things. First up, you've got the tech sector, which is just on an absolute tear, mostly thanks to all the AI hype. It's practically pulling the rest of the market up with it. Then you've got investors who are choosing to look past any current problems. They're focused on strong earnings expected for 2025 and are already getting excited about 2026. And finally, there's this weird upside-down logic at play, the belief that all this political pressure on the Fed might actually force them to cut rates sooner rather than later, which, would be like pouring gasoline on the stock market fire.
All right, but that's just one side of the coin. Now let's talk about the other force at play, this deep undercurrent of fear. This is the reason investors are running for safety at the same time. And this quote from Fed Chair Powell, wow, it really gets to the heart of the fear. I mean, you almost never hear a Fed chair talk like this. He's basically saying, hey, this isn't just about me. This is about whether the Federal Reserve can even do its job without political interference. The big worry here is that the Fed, which is supposed to be the stable foundation of our whole financial system, could get turned into a political football. And let me tell you, markets absolutely hate that kind of uncertainty. And honestly, that threat to the Fed is just the beginning. It's like the top of this whole wall of worry that investors are looking at. You've also got huge regulatory risks, like talk of a cap on credit card interest rates that could seriously hurt bank profits. Then there's geopolitical stuff, like the growing protests in Iran adding instability. And of course, the big one, inflation. We have some major CPI data coming out this week that everyone is watching. So there you have it, a market's tug of war. Let's really understand what these contradictory signals mean when they're happening at the same time. Yeah, this term, tug of war state, it's perfect. What it means is the market has no real conviction in either direction. The optimism is just strong enough to eke out a new record for stocks, while the fear is just strong enough to push gold to its own record. The key thing to get here is that the contradiction itself, that's the message. The market is telling us that it is deeply, profoundly uncertain about what's coming next. Okay, so we've covered the what and the why, but the big question is, so what? What are you supposed to do in a market that's literally pulling itself apart? Well, let's get into your 5-point action plan. All right, here are 5 steps you can take. Number 1, stress test your portfolio. Seriously, run the numbers. What happens if you get hit with a triple whammy? The dollar falls, rates go up, and stocks drop. Could you handle it? Number 2, don't make any sudden moves. Just wait for that big CPI inflation data to come out. Let the dust settle. Third, think about a hedge. With all this uncertainty, having a little bit of gold or other precious metals in the mix could make a lot of sense. 4, keep a close eye on bank earnings and pay special attention to what they're saying about 2026. And number 5, and this might be the most important piece of advice of all, try to avoid emotional trading. Tune out the daily noise, don't react to every single headline, and stick with your long-term plan. And hey, if you need any more proof that there's anxiety out there, just look at this number. This is the VIX, the market's so-called fear gauge. It jumped more than 4% on the exact same day that stocks hit a new record high. That tells you everything you need to know about the tension that's simmering right under the surface. So here we are, right back where we started. The market is stretched like a rubber band between incredible optimism and some really deep-seated fear. The big question for you isn't about guessing which side is going to win this tug of war. The real question is, how are you going to prepare for whatever happens when that band finally snaps?
Look, trying to make sense of a market this complicated is tough, but having clear analysis definitely helps. If you want more explainers like this one that help cut through all the noise, make sure you follow our channel. Thanks for tuning in.